Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo, Modiba, and thanks for joining me. Tonight, I'm joined by Lanre Buluro, Head of Investment Research at Primera Africa Securities, for a closer look at oil-producing companies in Nigeria. Thanks for joining us, Lanre. When you really look at the macroeconomic landscape right now, and probably extend that to a few other subtle aspects of investment landscapes within Nigeria, there's probably quite a lot to be negative about. Your thoughts overall?
Yeah, I mean, there's some few things, like you mentioned earlier, to be negative about. Global oil prices are down. As you know, a big chunk or majority of our foreign exchange income is from oil price, from crude oil sales. So the outlook is not as promising as we would like, particularly where oil is today. But I think what we need to, be a little bit happy about, a little bit more optimistic about, is the new government that's in place. A big focus on trying to curb corruption. A big focus also trying to move away from oil. Now, oil is still a major part of the economics here in Nigeria, but I think what this government is trying to do is that let's not depend on it alone and try to go into the other parts of our economy. There's been a big talk about diversification of our economy, but in reality, the economy is actually diversified. What is not really diversified is our source, the revenue sources. Like I said, it's still mostly dependent on oil. So I think what the government is trying to do is to look into other segments of the economy, particularly our GDP, and see what we can export to generate foreign exchange.
Does the current, significant pullback in oil prices allow this to happen? I mean, it's probably easier to structure some sort of change when pockets are full and coffers are full of revenue.
Of course. I mean, listen, it's going to take a while. I think that's one thing, that's one message the government needs to relate to the citizens, is that it's not going to happen overnight. Because we've been dependent on this oil revenue for years, so it's not a matter just happened overnight. It's been happening for past administrations since the 80s. There've been talk about saving for a rainy day, but as you know, politics and bureaucracy takes over, and they never did, and now we're kind of paying the price for it right now. So, but I think we need to be more optimistic. The budget that was released early this year is quite promising, even though we've seen some issues with some padding in the budget. Apparently, it's been amended. It's been submitted back to the National Assembly, and they mentioned sometime around March 17th for it to be approved. And I think once that goes through, you should start seeing growth. Now, we're saying sometime in the third quarter of the year before we start seeing some turnaround. I think it's going to be slow in Q1, also in Q2, then Q3, particularly to Q4, you might start seeing that growth that we've been expecting.
So given these structural reforms that are currently happening, is it fair to say that anybody who's looking at investments within Nigeria right now needs to probably take a slightly longer term investment view?
Yeah, you have to. I mean, it's like I said, you can't ignore the demographics here in Nigeria. I mean, 170 plus million people, a very young population. Urbanization's, almost 50%. So the major gap or the major issues right now is infrastructure, and I think a big portion of the budget has been earmarked to address that particular need. I tell our investors, we've been growing at a 7% GDP clip for the last 4 or 5 years without adequate power, without adequate infrastructure. Imagine if those were in place, the pace at which we'd be growing. I think China was where we are about 40 years ago, and if we see where China is today, I think it has to be a collective effort between the government and the private sector to get to where this country needs to get to.
And leaning from that budget, which are the sectors, I guess, from an investment perspective, are the ones that should, in the medium term, anyways, benefit quite a bit of that? I'd assume the cement sector should do quite well.
Yeah, I think particularly the cement sector. I think cement, real estate, home builders, I think will get a big boost from this particular budget. There's been about almost 400 to 500 billion earmarked to infrastructure, to works, power, and housing. I should probably throw in the power sector also. That's where the immediate need is right now. Of course, there'll be ancillary sectors that will also benefit from this. Like I said, good roads, folks in the agricultural sector be able to, supply, be able to deliver products from the north efficiently down to the south. The banking sector should benefit from this because there'll be a lot of financing opportunities, even though they're very skeptical right now in lending. But I think once the government really implements this particular the capital portion of the budget, I think that might also reinforce or provide some kind of positive guidance to the banks to lend to certain sectors in this particular industries.
Okay. Now we talk a lot about oil and gas, particularly for Nigeria. What are the ways that investors can take a part of investments within this particular space in Nigeria?
There's a lot of opportunities. I mean, it's not as glaring as it was back in the day, but I think there's some assets right now, producing assets that right now they're in need of capital. I think investors need to diligently look, even though prices are, quite cheap, to look at assets that are producing, that need maybe working capital or need some form of bridge financing to help them get to the next level. Average, break-even cost in Nigeria ranges between, $15 to say $20 a barrel. Right. Of course, you go to deep offshore, it's a little bit more higher, but the IOCs operate in those areas. So onshore, I think the opportunity is available. There are a lot of companies who are over-levered, are looking for some form of refinancing. And I always say the key thing is to make sure the asset's producing. I think if it's still exploration stage, it'd be a little quite difficult for you to get investors at because of where oil prices are right now. Right. But I think as oil keeps on creeping up, hits 50, hits 60, some of the economics become a little more attractive, and I think that's where people should start looking at to come to the market.
And would a weak naira actually help facilitate a lot of the or alleviate some of the pain that the sector has felt?
Yeah, it will, but I mean, I think a weak naira is not the only story. We need to know what the policy on the exchange rate really is. So people are still wary. A lot of investors are still wary, like, okay, I'm bringing $1 today into this market. Will it still be $1 at the end of the year? So I think once there's clarity around what the exchange rate will be, what the government wants to do, if it's going to be 250, if it's going to be 230, whatever it is, investors need that clarity before they really come in. So in as much as there's some attractive assets, like I mentioned earlier, I think people won't pull that trigger until there's some form of clarity on what the exchange rate should be.
And at a specific stock level, is there anything interesting right now within the sector in Nigeria?
So the limited companies who are really listed right now in that particular sector. I mean, so you have the downstream players. We have a Total, Fort Oil, Etena, Mobil. Out of that pick, I'll probably focus more on Total. Okay. On the upstream side, there are only two players, and actually one player, which is Seplat. Owando is the other player. As a group, they do have an upstream play, which is quite attractive. But I think there is some internal issues within Owando that I think for us we need to see resolved, particularly on the leverage side. They're quite over leveraged. They need to restructure the balance sheet before I can take a look at them. Seplat to me is a crown jewel right now. Okay. Dual listed in London, listed in Nigeria. Also having some, current oil prices, revenues are down. Also profits are also down also. But what we like about them that it's a two-pronged approach. So while they're in the crude, they're also a big exposure to the gas space. I think it's one of the unsaid story. People don't really focus much on the gas business, but I think, given our needs for power and the big push in trying to grow the power sector, the gas play is very, very important. I mean, they currently, at not even at full capacity, they're responsible about 20 to 25% of the gas need, for the whole power sector. So it's quite important that they fully get to full capacity in this area. They've been acquiring assets, with a gas focus, growing our infrastructure in that area. So I think off that alone, and gas prices here in Nigeria is a little bit higher than what you expect on the global spot markets. So I think that's where we see the attractiveness with that company. Strong management also, kind of like what they're doing. They kind of focus, have a good, clear agenda of what they want to do, and they have cash. They're still looking at opportunities in the space despite what we're seeing right now, the negative news flow again in that sector, but they're looking to acquire assets that seem to be complementary to what they have right now.
Right, and the cash on their balance sheet, does that really allow them, I guess, quite a bit of flexibility in terms of acquisitions? Do you see a lot more of that in the current environment?
Yeah, I think it gives them more flexibility. It's an environment where people are over levered. People have a lot of debt on the balance sheet. They've been able to manage that very well. And they're one of the few companies I know that go to the banks. The banks will be able to, because they like the management, they like the profile. They are producing. I mean, this is a company that got into an asset that was producing below 20,000 gross, and they're currently in excess of 70,000 barrels a day. So the major overhang is oil prices. As oil prices get improved, you should definitely see the fortunes both on the top line and the bottom line to also improve also.
Right. And in terms of underlying costs, what do costs look like really?
I mean, they've been managing their costs. I mean, still, the average cost that you expect across the industry, like I mentioned earlier, break even for oil in a particular region, is between $15 to $20. A big portion of that particular cost is security and logistics.
Right.
Actually, cost to get the oil out of the ground is quite attractive. So I think they've been able to do that. I mean, they cut capex. The capex guidance for the year. I mean, they kind of anticipated what was going to happen in global oil markets and reduced their spend on the air on capex and focus on producing existing wells and trying to maximize the assets that they have within those wells.
So longer term, would a business like this benefit from, the infrastructure program that the government is looking to roll out?
Of course. I mean, the government has a huge focus on the gas pipeline infrastructure in Nigeria. Like I said, it's kind of the conduit. It's pretty much a major driver for our power needs. One of the huge bottlenecks in the power sector is adequate supply of gas. The infrastructure is not in place yet, and they continuously are building that infrastructure. Another company, Seven Energy, privately held, there might probably be a potential target for a listing probably on the London market, are strongly focused on the gas infrastructure business, particularly in the south area of the country. And they have strong pipelines, providing gas to major infrastructure companies like Lafarge, Unicem in the south region, and they're continuously building pipelines, supplying power plants in those areas. So with government push and government focus in those areas, I don't see why the upside is not as positive for these companies.
All right, perfect. Let's leave it there. I'm quite excited that it sounds quite positive for the sector there. Thanks to my guest, Lanre Buluro, Head of Investment Research at Primera Africa Securities. That's all from Buy Africa this week. Remember to follow me on Twitter, that's at Modiba_Tshepo, and send us your thoughts about the show using the hashtag BuyAfrica. For myself and the team, good night.